Okay, so now we'll start with India's 40. Very, very simple example, standard. I could have actually skipped it also, but then still, quick revision can help us score those, few marks that we can score here and there, right? Now, investment property, India's 40, as we understood in the previous session, this deals with what? In property which are held for investment. Property when we say land or building, right? Now, here, again, this standard does not deal with biological assets because those are not land and buildings, and it also doesn't deal with mineral rights and mineral reserves because they follow the respective practices in the industry. Now, coming to the definition of investment property, investment property is property which is called land, building, or both. So, same way you have income from house property, right? Building or land appurtenant thereto. Same way, land or building or both, which is held by owner or lessee. Okay, so not only the owner, even the lessee, if he is holding that right to use property, that is land and building, not plant, land and building, if it is held by lessee, even for that, this standard becomes applicable, and for accounting of income and all of that, to earn rentals, capital appreciation, or capital appreciation. Now, what is not an investment property? Investment property, which is held for use in production or supply of goods or for administrative purposes. So, my office building, my employees' premises, and all of that, that is not a investment property. If I'm using my office, that's not investment property. If my employees are staying in staff quarters, and even if I'm collecting rent, okay, so sometimes what happens is employees stay in staff quarter and even rent is collected from the those employees. Even in that case, it is not investment property. It is property, plant, and equipment as per India 16. We call it owner occupied property. We call it owner occupied property. Property held for sale in ordinary course of business, what we understood yesterday, that is inventory under Ind AS 2. Okay, so that is the key part of the definition. Now, sometimes property may be held for more than one purpose. 5 floors, office, 2 floors, renting out. Purpose has to be clear. Okay, purpose has to be clear. So, if split is possible, if I am holding property for more than one purpose, office as well as for letting out, then you have to see, is split possible? Split possible means, can I lease out, can I rent out, can I sell out that portion separately? For example, if I have 7 floors building, first 5 floor I have my office, remaining 2 floors I give it out on rent independently. If I want, I can sell that independently. Then in that case, those 2 floors which are given out on rent, that will be investment property, and the one which we have occupied, we call it owner occupied property, which is covered by Ind AS 16. So owner occupied portion is covered by Ind AS 16, and the portion which is given out on rent, that is covered by Ind AS 40. If split is not possible, then you have to check what is the owner occupied portion. Now you may say, sir, when is split not possible? I have an entire floor. Out of that floor, what I thought is 1 or 2 cabins I will give it out on rent. Now, what you have to check in that case is, when I'm not able to split the property, I have to check if owner occupied portion is significant or not. If owner occupied portion is significant or not, 80% occupied, 90% occupied, significantly occupied, then you will say it is PPE. If it is insignificant, I am occupying only 1 cabin, entire floor I have given it out on rent, then insignificant, it will be considered to be investment property. Now, in some cases, what happens is, we also provide additional services along with the property. For example, hotel cases. In case of hotel, you take the room on rent, then you take the services, the room service, the food, the restaurant, the premises. It is more for a stay purpose and all of that, right? So there you are providing additional services which are significant, and hence you will classify them as property, plant, and equipment. But if I am only providing some basic services like security service, then in that case, the security service will not be significant, and you will classify it as an investment property. For example, I have a building. I give that building out on rent. Apart from that, I also take care of maintenance, the security and maintenance related aspect. Just because I am taking care or providing security and maintenance services also, I will not say it is property, plant, and equipment, because that is a small portion. But something like a hotel which has restaurant, bar, gymnasium, pool, and all of that, in that case, we will say it is not a investment property. And also, the hotel is being used for business, and hence in that case also it would be your investment property. Now, sometimes what happens is between two group companies, one company, the holding company may have property which it gives out on rent to subsidiary company. So in the standalone financial statement of the holding company, it will say investment property. But in the group financial statements, we will say property, plant and equipment, because for the group it is being used for the business. So some examples: land held for long-term capital appreciation, land for currently undetermined future use. So if at all you have land which does not have future use determined, you have not determined the future use, that is also called as investment property. Building owned by the entity and leased out under operating lease. So whenever you are giving it out on operating lease, investment property. Building which is vacant and is held for leasing out, investment property. Property under construction which will be held as investment property, investment property. So some examples of what is the investment property. Accounting aspect is similar to what we have learned in Index 16, just that the revaluation model is not followed. We will only follow the cost model. When do we recognize? Same way. Probable that future economic benefits will flow to the entity and cost can be measured reliably. As an owned investment property should be initially measured at its cost as per Index 16. So same thing what we have learned, all of that would be. If you are acquiring investment property on deferred credit terms, then you will recognize it at cash price equivalent. You will recognize it at cash price equivalent. Okay. Then if there is self-constructed, same principles what you have seen in this 16, the same thing will apply. Non-monetary exchanges, again I'm quickly revising whatever you have done in day 16. Does it have commercial substance? Yes. Then fair value of asset given up, first choice. Second choice, fair value of asset received. Third choice, if nothing can be done, carrying amount. Doesn't have commercial substance, carrying amount. Sir, if both of them are available, given up and received also, whichever is more evident, but generally given up is what would be preferred. Now, sometimes what happens is you may transfer property from one standard to another standard. Means you are not moving it from one standard to another standard. The purpose has changed. Maybe I have something which I have taken for office use. Subsequently, I don't need it for my office premise. I will give it out on rent to others. Or I have purchased as investment property. Now I want to use it as my office premise. Or I have purchased for investment property in days 40. Now I want to redevelop it and sell it as a part of my ordinary course of business. Now in that case, what you have to see is in days 40 to in days 16 means earlier it is an investment property. Now it is in days 16. So in that case, you will reclassify it as property, plant and equipment. Then in days 40 to in days 2 means you have started development with a view to sell in the ordinary course of business. In that case, you will move it from in days 40 to in days 2. If it is from in days 16 to in days 40 means earlier it was in property, plant and equipment. Now it is investment property. Or from in days 2 to in days 40, it was an inventory, but now I have given it out on these two others. In that case, you will reclassify. Now at what value? You will reclassify the carrying amount from one to another. Okay, that is what is done. So it's just a reclassification in the books. The presentation will change. Impairment covered by Index 36. When we understand, we'll cover that. Now, disclosure, one very important aspect of the disclosure here is fair value of investment property should be disclosed. You will not recognize, but fair value of investment property is disclosed. Now, as in case of Index 16, you have to show the reconciliation, opening balance, additions, deletions, depreciation, and closing balance. Same way here also you need to prepare and disclose the prepare and show the disclosures of reconciliation. Depreciation will be charged, but revaluation will not be done. Evaluation will not be done. That is one important aspect. Now, there was a requirement to solve illustration 5 from the study material. So, let me just open that. Moon Limited has purchased a building on 1st of April of year 1 at a cost of 1 million, 10 million. 10 million is 1 crore. The building was used as a factory by Moon Limited and was measured under cost model. The expected life of the building is estimated to be 10 years. Due to decline in demand of the product, the company does not need factory anymore and has rented out the building to a third party from 1st of April. On this date, the fair value of the building is 8 million. Moon Limited uses the cost model for accounting under for investment property. Now, one thing please keep in mind, you will not do fair valuation after you move to Ind AS 40. Right? When you move to Ind AS 40, you will not consider that your this is the fair value. You will consider the cost model only. First thing. Second thing, before moving from one standard to another, you have to calculate the carrying amount as per that standard only. For example, in day 16. As per in day 16, you will calculate cost, depreciation, impairment, and then you will see what is the amount to be transferred. Now, here in this case, if you see, it was following the cost model. The expected useful life is 10 years. Okay, so you purchased at 10 million. Useful life of 10 years means 1 million per year is the depreciation. 1 million per year is the depreciation. Then for 4 years depreciation will be 4 million, straightforward. There is no complication in this calculation. So you have 10 million, 4 million. Okay, so carrying amount is 6 million. At this carrying amount you will transfer it to investment property. Sir, what if the if it was impaired? For example, there is an impairment loss of 1, just for example, then carrying amount will be 5, that is 6 minus 1, 5, and at 5 you will transfer it to investment property. Okay, so that is how you will transfer from one standard to another standard. Now, when will we transfer? We will transfer when there is a change in use. Change in use means it is no longer an investment property and now you are using it for another purpose. Now, one more thing is, whenever you are transferring, carrying amount will not change. Carrying amount will not change. Whatever is the carrying amount as per one standard, you have to use that to transfer to another standard. See, this principle of using the same carrying amount, you have to keep in mind even when you are looking at let us say moving from Ind AS 16 to Ind AS 105. First calculate as per Ind AS 16, then take it to Ind AS 105. Or for impairment purpose, first calculate as per Ind AS 16 and then calculate impairment. Okay, that is when it would be there. I'll take up one more question, which is a pretty comprehensive question. Shaurya Limited owns a building. Shaurya Limited owns a building which is specifically used for purpose of earning rentals. The company has not been using building A or any of its facilities for its own use for a long time. The company is also exploring opportunities to sell the building if it gets a reasonable amount in consideration. So it has not been using and now it is considering to sell the building. Following information is relevant for building A for the year ended 31st March of year 2. Building A was initially purchased at a cost of 10 crores. At the time, the useful life of the building was estimated to be 20 years, out of which 5 years have expired as on 1st of April of year 1. So, as on 1st of April, 5 years have already been completed. Company follows a straight line method of depreciation. During the year, the company has invested in another building with the purpose to hold it for capital appreciation. The property was purchased on 1st of April of year 1 for 2 crores. Expected life is 40 years. The company follows straight line method. Further, during year 1-2, the company earned following income and incurred the expenditure. Rental income from building A, building B, sales promotion expense, fees and taxes, ground rent, repairs, maintenance, legal and professional fees, commission and brokerage. Okay, so before we jump into this, a quick recap. You have to disclose amounts recognized in P&L for rental income, direct operating expenses which generate rental income, which do not generate rental income, right? So that you have to disclose. So this is the one. Okay. Then the company does not have any contractual obligations against property A and B. For complying with the requirements of Ind AS, the management has sought an independent report from the specialist as to ascertain the fair value of buildings A and B. The independent valuer has valued the fair value of property as per valuation model recommended by International Valuation Standards Committee, and fair value has been computed by the method of streamlining the present value of cash flows, basically the discounted cash flow method. Now, one thing that you have to also keep in mind is these type of questions, if at all they come in the examination, they will consume a lot of time in just reading the question. So it is important that you get into this habit of reading quickly and being able to mark or highlight. I know examination is not able to highlight, at least make small marking somewhere or note it down in your paper that okay, these are the key aspects of this particular question, because this long question the institute is may give for 8 marks. You will lose 4 5 minutes just in reading the question. Okay, now the other key inputs for valuation are as follows. Estimated rent is so much, expected to grow at 10%, 12 to 13%, and all of that. Assume that the fair value of properties based on discounted cash flow method is 10.5 crores. The treatment of fair value property is to be given in the financial as per the requirements of Ind AS. What would be the treatment of building A and building B in the balance sheet? Please provide detailed disclosures, computations in line with relevant Indian accounting standards. So a very long question, right? Now here calculation is not tricky. Calculation part is not at all tricky. In fact, I'll just share with you the solution. I'll just share the screen so that we can discuss the solution. Just a moment. Now you have to make a lot of disclosures regarding what one is the carrying amount and all reconciliation. That part is understood. You also need to disclose about what is the fair value, how is the fair value calculated, what are the inputs that go into the fair value. All of that needs to be disclosed. So now here the measurement and the disclosure of investment property is as follows. First, gross amount, opening balance 10 crores. Now opening balance of the gross block, the first building, okay, that is 10 crores. Then additions 2 crores. So 10 crores was the opening balance, the first building. Then you have purchased another building, 2 crores, land and building. So 10 plus 2 makes it 12. Then depreciation. On the opening balance, the depreciation is for remaining life of, I'll just check the life in the other sheet, just a moment. So the life is 20 years. The life is 20 years, out of which 5 years have elapsed. Out of which 5 years have elapsed means 0.5 crores is the depreciation for that building. So for this first building, out of 10 crores, it has a useful life of 20 years. So 0.5 crores is the building. That's the first period. Then the building that we have purchased now 2 crores, that 2 crores has a life of 2 crores has a life of 40 years. So 0.05 is the depreciation. So 0.5 and 0.05, this number that you can see here, 0.5 and 0.05 is the depreciation, right? Now, what is the opening balance of depreciation? See, 10 crores, 5 years have already elapsed. 5 years have already elapsed. So 0.5 into 5, 2.5 crores. So the depreciation that you see, the opening balance of D, 2.5 crores, right? So the gross block, gross cost of 12 lakhs minus 3.05 of the total depreciation, that gives us 8.95. So that is one aspect related to depreciation. Now Another thing that you need to discuss is what is the amount to be recognized in the P&L. Now, what you have to recognize? Rental income. What is the rental income? First. Second, what is the direct operating expense related to rental income? Whatever direct expenses are there. Then, profit before indirect expenses. So we will consider whatever is the profit before indirect expenses. Then depreciation as calculated above 0.55, we will reduce that, and then profit from investment properties before indirect expenses 0.32. Now indirect expenses is the breakup is not breakup is not required. Only direct expenses is what you will consider. Now what are these direct expenses? These direct expenses are the sales promotion expenses, the fees and taxes, the ground rent, the repairs and maintenance, then your legal and professional fees, commission charges. All of these are direct expenses. Sir, you might be thinking, sir, this sales promotion and all of these, generally we see it as indirect expense. Here we are saying direct operating expense, means what is the expense that is directly related to that operation of that particular property. Okay, then you have to disclose how you have got to the fair value. So the fair value is 10.5 crores. Who has done the valuation? Independent valuers. Then who are specialists? Then the method used is valuation model recommended by International Valuation Standards Committee. Then the various factors that has been considered. Then what is the technique used? Valuation technique used. What is the observable in unobservable inputs, and what is the range that is there. Now this is what you have to present it in these type of questions. Two things I want to tell you. First, don't try to learn by heart. It is very very difficult and impossible. Highlight the key points, read the answer 2-3 times so that you get comfort, right? So that is about Ind AS 40. If you have any questions on Ind AS 40, if you have any questions on Ind AS 40, please feel free to ask. There is one question. If I am lessee of investment property and I sublease the asset, will I show the asset as a portion of investment property or lease receivable? So if you sublease the asset on, let's say, a finance lease, there will be a lease receivable. If you sublease the asset as a right of use asset, then you will, if you are giving it out as an operating asset, then that becomes a part of your investment property. See, accounting and all, how you will do for leases and all, for that you have to go to Ind AS 116. 40 is more about the presentation aspects and classification aspects. If lease is a finance lease, then there is no question of your investment property. And also, if you have taken a lease, you have to take it on finance lease. Please remember, you must have the right. You cannot say I'm taking it on operating lease and then I'm subletting it, and then you have to classify it as the investment property. Okay. So with this, we conclude Ind AS 16 and Ind AS 40. I'll take a break here because we don't have sufficient time to have a significant discussions on Ind AS 38, and it doesn't make sense to just discuss for 10 minutes and just break the chain. If you have any other questions, see, one is subject related question. If you have any non-subject related question, if you want any guidance, clarification, I'll be available for next 5-7 minutes, and then we can call it a day. On the sessions, if there is any feedback, useful, not useful. And also one very important thing for all of you is, I know you are getting up at 5:30, joining the sessions and all of that. That is perfectly fine, absolutely great. But you must necessarily follow up with your self practice and revision. Unless you do that, see, if you think that just by looking at the question, I know how to solve the questions, I know how I will handle the questions in the examination, you need practice. If you do not practice, suddenly you will see, we have completed 2 big standards, 2 small standards. If you do not practice continuously, every day, it has to be an everyday routine. I am giving you 1.5 hours in the morning. You have to give another 1 hour to go through the questions. Only then you will get ready for the examination. Otherwise, nearby the exam time, you will think, no, no, I will do subsequently, I will practice subsequently. It becomes again very, very difficult. So that is one aspect what I wanted to tell all of you. Then, okay, so no more questions. Okay, got it, understood. Sure. So that's it for the day. Then tomorrow, whether opting for IFRS for elective is good option and how can we prepare for it? Very good question. Now, should we elect for IFRS or not depends on your interest, and it is GFRS, not just IFRS, right? Should we opt that or not? Now, two things you have to understand. How comfortable are you? How comfortable are you with the standards? Okay. Now, one thing is INDAS and IFRS 95% they are same. Okay, that is as simple as that. There is no confusion as to whether you need to take understanding part IFRS and Ind AS. Once you have done Ind AS, IFRS is also doable. Hardly one or two cases you will see differences, and that also we cover as carve-ins and carve-outs as a part of CF final Ind AS syllabus. So that way it is not at all difficult. Okay. Now when it comes to the other aspects, like you have to understand whether we need or whether you can what do you call you want to specialize in taxation, then you have to take the taxation related paper. Then if you want to specialize in, let us say, in case of risk management, all of that, people take it, but it is more like a theory and all of that, and it audits and those related aspects. If something like markets interest you, SFM interest you, then you should consider financial services paper. Then if reporting is what interests you, then you should take the aspect related to the GFRS. That's sorry, global financial reporting standards. Now IFRS would be there, that is you would have already covered, that's not a problem at all. US GAAP, some places here and there will be differences, so if you're able to manage that, you should definitely consider that. If taxation interests you, you take it, and a lot of students take the economic loss. Okay, the reason they take economic loss is because that is relatable to some part of it is relatable to the law that you already learn, right? For example, FEMA, then prevention of money laundering and all of that. So people also prefer 6D. What I'll do is I'll also give you one analysis video that we had created. I'll share it in the WhatsApp group, that you can use it to have it done. Material hard copy is not available currently, it is out of stock. If there are enough, so what I'll do is today I will check in the team. If there are enough orders, I can print and we can spiral bind it and we can send it across. Okay, so or you can take the PDF, that is more easier, the same at the same amount that you would pay us. I know it will be slightly costlier because we give bulk orders, it will be slightly cheaper, but we need to courier it to you. So at that amount, we can take the download the notes, get it printed from any Xerox center. I think that would be good enough for you. Okay, right? Chalo, thanks a lot, and we'll see you tomorrow in day 38. Need questions. If you have any question, if you want me to solve any question like this number 5 question, right? So one student had given it to me and then I could solve it in the class. If you have anything specific like that, even if I don't solve it fully, I will definitely discuss that in the class. Chalo, thanks a lot, and see you tomorrow. Have a nice day.